After what I would call a very successful last week of trading for AMC, we are setting up better than ever now for the next couple of weeks and the next couple of months to give us a huge short squeeze. And a lot of the rally last week was actually due to option activity, which is about 100 to 200 days out to expiration. This was not done by retail investors. This was not done by me and you. This option activity that fueled last week's rally was done by big money, by hedge funds, by institutional investors. And that is why I am going to bring you guys that information here in this video. As well as that, we are going to be going over the Ortex data and taking a deep look at the technicals at exactly what they are telling us, guys. So we have a lot of ground to cover in a very short amount of time. Do your part, hit that like button, subscribe to the channel if you guys like these kind of videos. If you want to see AMC stock rally, the more people that do that, statistically speaking, the higher probability that AMC will rally, just the more attention that the stock will get, guys. Now, keep in mind, none of this is financial advice. Do what you guys want to do. If you are trading speculative assets, they should be a small percentage of your portfolio. A quick disclaimer, because I am not a financial advisor, but nonetheless, you guys know the deal. Let's get into it. So first and foremost, last week, AMC had a beautiful rally, really from the lows of the week. We can go ahead and chart this real quick. You rallied about 14%. That is including the red days, the green days. That is including the 13% rally we seen on December 1st. Now, why is this so key, and why am I even talking about this right now? Well, it's because the long call activity was very impressive. Now, what's intriguing about this, as this article says, we'll just go ahead and read these first couple paragraphs because there's a lot of information in here that you definitely want to hear. It says, AMC stock brings back the intrigue. Following the close of November 28th session, AMC stock represented one of the top highlights of unusual option activity. Now, we got to categorize unusual option activity. It can be a lot of just contracts purchased. It could be a lot of contracts that are for a certain date or expiration or far out the money. These, are typically not done by retail investor or hedge funds, I should say. They're typically done by retail investors. Hedge funds, they don't like to go super far out the money. Sure, you can make a lot by doing that on a percentage return basis, but you have a lot higher odds of losing money. A lot of hedge funds like to buy options that are deep in the money because you get more of a dollar for dollar kind of move. You only have to be right on the direction of the move necessarily, not how high the stock goes, right? For an example, if you buy options that are deep in the money on AMC, you might only have a 0.25% or a 0.5% or 1% to break even. At that point, after that 1%, you're in profit territory. If you're buying options that are, say, 50% out the money, well, the only value those options have is the extrinsic value. There's no intrinsic value there because they're not in the money. So basically, if the stock doesn't move up very rapidly, in a very short amount of time, you're going to lose money. So those far out the money options are representing a much more bullish bet than the deep in the money options that you typically see hedge funds playing. Now, it says specifically traders targeted the $11 calls with an expiration date of June 16th, 2023, 199 days to expiration since the placement of the order. As well, volume reached 20,115 contracts against an open interest reading of 408. The bid-ask spread, as represented by the midpoint price of $1.28, $128 for those of you guys that are unaware of how options work, came out to 8.59%. For the record, AMC closed at $7.33 in the open market. Therefore, for this trade to be at the money, shares will need to rise a hair over 50%. Given the stock's mobility, it may be a reasonable speculation. And I think that is the most interesting thing out of all of this. The amount of contracts compared to the open interest that was held on that same day, this could have been done by nobody other than hedge funds and large money. And large money likes to go out 200 days on their options. And just to see the combination of how much time that these options have, which is not that much in the grand scope of things, we're going to be to 2023 in less than a month now, so it's not that much time to go 50% out the money, a little bit over 50% out the money. That is telling you there's a high level of conviction. And when you look at 20,000 contracts that traded hands for roughly $128 a piece, now how much money is that? Let's go ahead and do it. 100 and just call it 28. That's about $2.5 million betting that AMC will get this 50% rally over the next 200 days. And, that's a decent amount, and that can push up the price of AMC ahead of time. That's probably why you've seen a lot of hedging, and especially if hedge funds are doing this with options. Market makers, they're probably going to go out and hedge those bets a little bit beforehand, and that is exactly why I think AMC rallied last week. Mix that in with maybe a couple 100,000 shares being covered just from hedge funds that had to cover. By and large, last week's rally was not a shorts covering kind of rally. So I hope you guys found some value out of that, and I hope you guys are excited about that, or hopefully just as excited as I am, because I am clearly ecstatic about what we are seeing with AMC. Technically speaking, we're going to look at the charts. It's looking very good. The Ortex data also looking very good. If we take a look at the live short interest of free float, that is sitting at 20.81%, 107.28 million shares that are currently sold short. This number is up from about 90 million shares that were sold short just about 2 weeks ago. So this is still indicating, 17 to 20 million shares have been sold short over the last couple of weeks. And that's a big reason why AMC has remained so docile, in my personal opinion, in, recent, or I just call it the last 6 to 12 months. When you see AMC break above the 50-day moving average, it's typically a very violent move, but this is being met with more shorting, and you'll understand what I mean when we look at the charts here in just one second. But nonetheless, let's not get too far off topic of the Ortex data. The cost to borrow numbers have been a main highlight of AMC over the past couple of weeks. Cost to borrow average sitting at about 38.68%, cost to borrow max at about 55%, and cost to borrow minimum at 6.5%. The cost to borrow numbers, the live numbers that we are seeing, sitting at about 32.5%. So it's been a lot of ups and downs, but still 32.5% is a lot higher than what we were seeing over the last couple of weeks in that 10 to 20% range. And a lot of these loans are kind of like revolving lines of credit, right? If you're a business owner, and I know some of you guys probably are, if you have revolving lines of credit, they are not a fixed rate. It's based off of a lot of factors, right? But it doesn't tend to be fixed. And same thing here. So when you see, if you are a business owner and you've had a revolving line of credit throughout 2022, you have seen your interest rate going crazy. That's because the Fed's been doing what they've been doing, so on and so forth. And it's not pretty. It doesn't feel good when you see your interest rates go up. And that's exactly what is happening to these hedge funds as of recently, guys. So if you do look at the days to cover as well, that is sitting at 6.81, just showing you there's lower volume and it's harder for shorts to actually get out of those short positions. 100% shared utilization has been the norm, and that is still where we are at. As far as the actual positive order value on Friday, 31 orders totaling $1.76 million, positive order value of 57%. So that is very bullish in my personal opinion. Positive order value has not been over 50% in quite a decent amount of time. Now, to summarize all the option activity for last week, you've seen about 170 orders totaling $34.5 million, positive order value of 57%. And you are starting to get more of those, far out the money options that are being placed as well. For an example, December 23rd, the 950 call is being targeted pretty heavily, and that's still like 25-30% out of the money from here. So not necessarily just the big bets like we just talked about are important. The other ones are also important as well, but they're not as big, so they're not going to get as much light. But that is what has been happening. That is what has been fueling this rally, guys. So nonetheless, everything I just went over is very bullish in my personal opinion. If you look at the actual option activity, keep in mind what I've been saying. You don't have to see high numbers on the Stocko Tracker website to actually get a big move. Last week, we didn't have a lot of option activity, at least on the Stocko Tracker data, right? It just wasn't there. 23,000 calls that were in the money and about 60,000 calls that were out of the money. Nothing too crazy. We've seen higher before, but yet you've still seen somewhat of that gamma squeeze effect because of the options that were being bought, you know, super far out the money and essentially with some time on the options still. And just to repeat myself again, that is only, you know, showing the most unusual options. Like I just mentioned, for December 23rd, a lot of people are targeting 950. That's right around the corner, guys. That's still far out the money, but it's not, you know, $2.5 million worth of orders at that level. So there's that. As far as this next upcoming week, you have about 13,500 calls that are in the money and about 43,000 calls that are, or about 13,500 that are in the money and about 43,000 that are out of the money. The big option expiration is going to be December 16th, where you do currently have about 30,000 calls that are in the money and about 137,000 calls that are out of the money. And I do imagine this option expiration is going to keep populating on the option chain as we do blow through the next 2 weeks or so, guys. So there is that. Let's take a look at the charts before we do wrap up this video, because boy, does it look bullish. And first thing that I want to point out is last week you had a lot of activity. And what I mean by that is right here on December 1st, you blew right through the 100-day moving average to the 200-day moving average. And then what happened? Next day, you came down under both of these levels. But what interesting enough happened on Friday, you went up to this 100-day moving average, got rejected, came down quite a bit, and then you went up by the end of the day to actually close the day unchanged for AMC. You did drop about 7 cents in after hours, but who even cares about that right now? I don't really think it means anything in the grand scope of what we're talking about, and I kind of messed my chart up, so just 1 second, guys. But the interesting thing to me is that you retested this 100-day moving average, and that is really going to show that potentially we're probably going to break out above these moving averages. Typically, when you do get the test of these moving averages and get rejected, you tend to gap up above those levels over the next subsequent following days. And like you can see back here in July, like you can see back here in September, it tends to repeat itself over and over again in August as well. And it tends to play out that way around these moving averages because there is a lot of trading algorithms that are trading off of those moving averages, guys. So what I do expect in this next upcoming week is to really break out above these moving averages. It'll be important, I think, to watch if we get a lot of rejection around the 200-day moving average. That's going to be a little bit harder than not to break out above, but I think the 100-day moving average is going to be relatively easy. Now, you have also seen quite a bit of volume in the past week compared to what we are used to with that day, December 1st, where you've seen a lot of option activity, a lot of that hedging from market makers. You had about 97 million for volume, and that's a lot more than what we are typically used to seeing. So I think a big question is, does the volume continue to come into the stock? Does it get larger in this next upcoming week? Or essentially, does the volume remain flat and we continue to rally? Because that's the best case scenario, with flat volume and we slowly and steadily rally to the upside, and then we get that big volume and it really makes a pop off move. But just long story short, guys, there's a big reason for shorts to cover on their short positions. Not a huge bear case left at this point. And as far as all the data is telling us and how hedge funds are actually positioning, I would expect to see a major rally. One could call it a short squeeze over the next couple of weeks, guys. So that is it for this video. Leave me your thoughts, comments, questions, or concerns down below in the comment section. You guys know the deal. Hit that like button, subscribe to the channel, and if you guys want to come trade with me live in real time as well, link down below in the description of this video. Most importantly, thank you guys for watching. Enjoy your weekends, and I will see you in the next one.